Dear students, in this particular video, I am going to discuss about issue of debenture as collateral securities. Now, what is collateral securities? The term collateral refers to an asset that a lender accepts as security for a loan. If you want to take loan from the bank, they ask about the mortgage. You can mortgage your property, you can mortgage your jewelry. So here the company mortgage the debentures to the bank to collect the money from the bank as a loan. At the time of repayment of the loan, if the company unable to make the payment, then the lender should or the bank should sell that particular debentures in the open market and recover their losses. Okay. Now see, the issue of debentures as collateral means debentures issued as collateral securities is secondary or parallel security for the original loan taken by the company. The lender can realize, lender means here the bank or the lender can realize the collateral security in case of borrowers that the company fails to make payment at the original loan if the company unable to make the payment of the original loan amount, then the bank or the lender can sell the collateral securities as the debenture in the open market to recover their losses. Okay. The term collateral refers to an assets that a lender accepts as security for a loan. The collateral acts as a form of protection for the lender. It is the protection for the lender to recover the loan. That is, if the borrower defaults on their loan payments, the lender can seize the collateral and sell it to recoup some or all of its losses. Okay. Now, in the accounting treatment for that, we have to open the debenture suspense account. As the debentures are not issued in the open market, so there is nothing is been debited instead of credited the debenture account. So here debenture suspense account arise. Debenture suspense account is an adjustment account which is prepared at the time of issue of debenture as collateral security. They are debited because it is a temporary account created to record debentures on the credit side, and when the loan is repaid, a reverse entry is passed to cancel the debentures issued. Okay. Now see the methods of accounting of debentures. Basically there are two methods. In the first method, we just write down the bank account debit to bank loan. There is nothing to be written for the debenture issued as collateral securities. But in the second method, we posted both. First one is the same as the first one, that is bank account debit to bank loan account. And the second part of the second method, that is on issuing the debenture as collateral securities, debenture suspense account debit to debenture. Basically, whenever we issue the debenture, we receive the bank amount. So bank account debit to debenture is the basically the journal. Or if you make payment to the vendor, then vendor account debit to debentures. But here the debentures are given to the bank for collateral securities. So debentures should be credited, but which should be debited. So for that we open the debenture suspense account. Okay, so debenture suspense to debenture account. Now take an example. AB Limited took a loan of rupees 1,20,000 from a bank and deposited 1408% debentures of rupees 100 each as collateral securities. So bank received the collateral securities of 1400 into 100, that is 1,40,000, and given the loan of rupees 1,20,000. So bank have to provide 1,40,000 of rupees debenture for collateral securities to take the loan of 1,20,000. Company can take a loan of 80,000 after 2 months from a bank and deposited 1,008% debentures of rupees 100 each as collateral securities. So now see the journal entries in the books of the company. So journal entries in the books of AB Limited, first one is the same, that is bank account debit to bank loan. Here they receive 1,20,000 as the loan, being loan obtained from bank. But in the second situation, that is the debenture suspense account debit to 8% debenture, it is 1,40,000, 1,40,000. Why it is 1,40,000? Being issue of 1,40,000 debentures as collateral security to secure a loan of rupees 1,20,000 from the bank. So company submit the debentures of rupees 1,40,000 to take the loan of rupees 1,20,000. So here the debentures is given as collateral securities to take the loan from the bank. In the same situation, they take another loan of rupees 80,000 by giving the collateral securities of rupees 1 lakh. So the first entry is bank account debit to bank loan account, it is 80,000. Being loan obtained from bank, and in the second situation, debenture suspense account debit to 8% debentures, it is 1 lakh, 1 lakh. Being issue of 1 lakh debentures as collateral securities to secure the loan of rupees 80,000 from the bank. So these are the accounting treatment for collateral securities, issue of collateral securities to take the loan from the bank. Okay, thank you.